Good morning. Good morning. This is Che Yusuf from the Daily Money Market. Yeah, another day today. One of the biggest day in the global market. We are actually anticipating to receive the news in terms of CPI, in terms of consumer price index. So definitely wanna do a little bit of prep in terms of consumer price index, just to see how the price index is gonna go, and how the news release is gonna go. And again, it gives you a little bit of preparation in terms of your chart to understand where we are actually anticipating the market would be able to go. So before we actually having the anticipation of the market, where exactly it can go, and and where the future move of today is going to produce, the most important is to understand what actually the consumer price index actually means. So the consumer price index, it's actually an index that measures how much people have been buying, in terms of buying the products in all industries, right? So one of the indicators from CPI that gives the idea of how CPI is moving, it's a retail sales, because the retail sales, it's one of the biggest industry, and they use that retail sales measurement to actually get the numbers in terms of consumer price index. So it's very important to understand that you don't just understand the consumer price index, but also you need to understand the retail the retail sales, how the retail sales are actually happening according to month, so that you can understand the consumer price index according to month. Then you're going to need to understand the producer price index, who produced those products that is being in the market and that is being sold, and how are the actually numbers work in terms of month to month. So the consumer spending fall in October, according to the new CNBC, right? The retail monitor tracking card transaction. So October retail sales excluded at auto and gas fall by 0.8% according to the new CNBC report. So the retail sales is only excluded gas, and also the automobile industry, companies that produce cars, because they have their own index that measures their industry as well. But this one, it actually really really important, is because of it include food, beverage, healthy, and so on and so forth. And that's what normally a lot of people we actually use in every single day basis. So that actually gives a clear point or clear indicator of how consumer are being participating in the market. So the retail monitor is a joint product of CNBC and the National Retail Federation, based on a 9 billion annual credit and debit card transaction collected and analyzed by Affinity Solution. The October data are accounting for more than 500 billion in sales, showing a weakness in the gas station sales, electronics, appliance, and furniture at home stores. So the consumer took a spending break ahead of the holiday season, with October retail sales excluding an auto and the gas falling by 0.8%, and the core retail, which also removes the restaurant, declining by 0.03 according to the new CNBC report. The new retail monitor debuted on Monday, is a joint product of CNBC and the National Retail Federation, based on the data from the Affinity Solution. So it gives you the specific results about the specific industry and how they actually, performing right at the moment. So by the look at the things, it actually shows that on October, the retail sales percentage have actually dropped to 0.03%. The reason being that we are seeing this drop is because of the researchers have discovered that a lot of people, they are actually holding back with their finance, instead of spending it at this time. Because if you look at it, the report, they're talking about appliances, things that people can buy. Whenever you're moving from one area to another, you need to buy those type of appliances to use it at home. So the consumers are holding back. The reason why the consumers are actually holding back is because of there's another sell, a biggest sell. Actually, we can call it the biggest sell in the world right now, maybe except in Asia. Maybe it's not that much popular, but in US and the southern hemisphere, it's one of the biggest sell, which is the Black Friday. So the Black Friday, it's coming this month. I think it's on a Friday on the 29th, if I'm not mistaken. No, it's Friday on the 23rd, 23. Yeah, that's where the Black Friday is coming. So a lot of consumers in the world, they're holding back for that type of a sale. I mean, if you want to buy like something like a fridge or TV or any type of appliances, and you only have 2 weeks to actually get to the biggest sale in the world, one of the weekend that it's busy entire world, including the southern hemisphere, you actually wait also so that you can take advantage of whatever percentage has been dropped. So that's what actually it tells us in terms of these retail sales. Now, what it means, the numbers that will come today, the question is the numbers going to rise or drop? Because of the numbers, they know they can't be rising if the retail sales have been short the negative, right? So the numbers has to be dropping. It means people, they are not yet spending their money in a market at particular times. So the consumer price index, I don't think the number they're going to be really positive. I think the number they're going to be, a little bit negative following the retail sales in terms of October report. So yeah, that's what pretty much I'm thinking in terms of the preparation of the dollar itself in and on the CPI numbers news that are dropping soon. So even if you look at in terms of the index, the biggest indices in the US, like NAS 100, Nasdaq, which holds a lot of companies from US, over 100 companies, biggest companies, tech companies in that particular index. You can see it's been ranging at around 15,521 on a highest spot. If you look at it even on a biggest frame, you find out it's still sitting at 15,521, which is really really high spot. And now what we're anticipating, because if it wanted to break and go above 500, 15,500, it could have already broken from last week already, but it didn't push the numbers to that high level. So we are anticipating that it will actually starting pushing the price a little bit all the way down, maybe to get to we can say 15,000 flat, or 15,600, 15,050, maybe to get to that level. So this is one of the biggest index. If this index is dropping, it means the value of the dollar at that particular time, it's actually also losing power. So following the other index that actually matters most, it's the US30. It measures some of the biggest industrial 30 companies in the US. So it's very important because of people who are working in that industrial companies. When they get paid, they're going to buy something, and that particular industry that they are spending their money, they actually release the report of the retail sales, right? So the US30 right now sitting at 34,363, is been all the way for a day or two, actually ranging at the same level from last week. So the anticipation also, if the dollar is not going all the way up, if the numbers are not positive, we are anticipating US30 also to drop a little bit, maybe to 34,100 or to 33,964. If it pushes all the way down there, that's the bonus that we can get. The last one, the last most important instrument that you should measure when it comes to the day like this, it's gold, right? Because of gold, it's one of the biggest commodities that measures and going against the dollar index itself. So we need also to look at the gold. So gold right now is sitting at 1,944 dollars per gold. And for the fact that we I'm thinking that the price of the dollar, it will drop today, or the results of the consumer price index is not going to be positive, so the dollar is going to push all the way down. So investors, they normally move looking to the safe haven. So the safe haven in this scenario, it's actually gold. That's why it's called the safe haven. It's two safe havens that actually you can save your money really really very well. Gold, which is commodity, and the Swiss franc, which is Switzerland, one of the biggest country in terms of the saving money because of their monetary policies and so on and so forth. So gold, it's a safe haven. So a lot of people, they might jump, instead of participating on an index or indices from US or any dollar correlated instrument, they might now start, getting into getting into gold as a safe haven. So anticipating from 1940, maybe to push a little bit all the way up as a bullish, movement all the way to 1965, I may think. If it will go all the way to 1990 or 1900, that would be a huge bonus that you're getting in a global market for the price movement. But I think it will move to 1965. That's my actually, prediction for today for CPI. So yeah, thank you very much for tuning in. I hope you enjoy this video. Yeah, I mean, catch me on the social media. It's Che Yusuf everywhere. Yeah, let's go.